Welcome to the deep dive.
You know, the market, it can really throw you some curveballs.
It certainly can.
Just yesterday, May 12th, 2025, Block's stock price, it jumped, popped up by 9.25%.
Yeah, I saw that. Pretty significant move.
Especially since it came right after a downturn, and analysts seem, well, pretty divided on it.
Right.
So what's really going on here? What's the real story behind the volatility with this, major fintech player?
That's exactly what we want to try and unpack today. We're looking at Block, Inc., stock symbol XYZ. It's a really diverse global tech company focused on financial services, mainly through Square and Cash App, which most people know. But they also have other things going on like title and quite a bit around Bitcoin.
Their mission is economic empowerment, I think.
That's the stated demo. Yeah, it's broad. We're going to dig into what that actually means in practice today.
So our mission here in this deep dive is really to get past all the noise surrounding Block. We've pulled together a whole bunch of research analyst reports, financials, news.
All the good stuff. Yeah, and we're going to try and synthesize it for you. We want to understand the core business drivers, the real risks, the substance, and what potential it might have for long-term value.
It's not just about one day's stock jump.
Exactly. It's the bigger picture. Operations, management, financials, market view, ownership, risks, the whole package.
The comprehensive look.
Consider this your shortcut to getting up to speed on Block. And just so you know, all the sources we're talking about, they'll be linked in the description if you want to go even deeper.
Yeah, we've looked at quite a range of stuff to try and get a balanced perspective. The goal is to go beyond just the headlines.
Give you some clear, actionable insights into what makes Block tick.
Exactly. The complexities of their model.
Okay, let's get into it. Chapter 1. Understanding the business. What exactly does Block do? Let's start with those two core ecosystems. Square first.
Yeah, Square. That's really where it all began for Block. It's built around providing integrated commerce solutions for businesses.
All sizes, right? Small shops to bigger companies.
Exactly. It covers payment processing, handling card payments in person, online, and their point-of-sale hardware. Those little readers, the terminals you see everywhere.
But it's more than just payments now.
Oh, yeah, much more. They've got a whole suite of business software, e-commerce tools, inventory management, CRM, even things like payroll and appointments.
And banking services, too.
Right, through Square Financial Services. They're really trying to be a one-stop shop for businesses.
So how does Square make money, then? It's got to be more than just selling those little white squares.
Definitely. The main driver is still transaction fees. They take a cut of each payment. But subscriptions for all that software, that's becoming a much bigger piece of the pie.
Right.
For Square, the strategy is really about getting new merchants, keeping them happy on the platform, and trying to move up markets, serving bigger businesses with higher transaction volumes.
Makes sense. Square is the business side.
Yeah.
Okay, let's flip to the other big piece. Cash App. That feels more consumer-focused.
Totally. Cash App is built for individuals. It started out simple, right? Peer-to-peer payments, sending money to friends easily.
Yeah, everyone uses it for that.
But it's evolved. It's now a much broader financial platform. You've got the Cash App card, direct deposit options, even investing in stocks and Bitcoin right there in the app.
And Cash App Borrow. That loan feature.
Yep, that's part of it too. Offering short-term loans for eligible users.
Cash App has a huge user base, doesn't it? I remember seeing some big numbers.
It really does. We're talking 55 million monthly active users in 2024. And get this, 71 million people used the Bitcoin futures in just Q3 of 2023.
Wow.
But, and this is really important, they reported flatlining user growth in Q1 of 2025.
Well, flatlining. Uh-oh.
Yeah. For a platform that relies so heavily on network, affects more users, making it more valuable, that stagnation, that's definitely something you need to keep a close eye on.
Okay, that flat growth is definitely a yellow flag. So how does Cash App bring in revenue?
It's a mix, similar to Square in some ways, but different streams too. Transaction fees on certain things like instant deposits or using a credit card for P2P.
Right.
Interchange fees are big too. That's when people use their Cash App card to buy stuff. And then revenue from the Bitcoin and stock brokerage services.
Though the margins on crypto might be different.
Exactly. That's key. The profit you make on facilitating a Bitcoin trade isn't the same as on a core service.
Okay, so Square for business, Cash App for consumers, then there's Afterpay, the buy now, pay later service they bought. How does that fit in?
Right, Afterpay. Acquired back in 2022, they're integrating it into both Square and Cash App.
So for shoppers and businesses.
Yeah. For shoppers, it's payment flexibility, pay in installments. For merchants using Square, it's another tool to potentially boost sales, attract customers.
Yeah, I was doing it.
In Q1 2025, Afterpay reported $10.3 billion in gross merchandise value. That was up 13% year over year, which is decent growth.
But that BNPL space feels crowded.
It is. Competition is heating up, and there's definitely more regulatory scrutiny coming down the pike for BNPL services globally. That's a risk factor.
Yeah, seems likely.
Yeah.
Okay, beyond those main parts, Block has other things too. Tidal, the music service, and those Bitcoin projects.
That's right. Tidal is their music streaming platform, focusing on higher sound quality, artist empowerment, that kind of thing.
And the Bitcoin side.
More direct involvement there. BitKey is their self-custody wallet, giving users more control. Proto is their project to actually develop Bitcoin mining hardware. And Spiral Fund's open-source Bitcoin work.
Are these making money yet?
Well, the broader crypto services actually hit break-even in 2023, which is interesting. And that Bitcoin mining hardware. Block has thrown out some pretty big potential revenue numbers, like $3 to $6 billion annually in the future.
Oh, $3 to $6 billion from mining hardware. That's ambitious.
Very ambitious. Definitely something to watch.
Okay, let's zoom out. Revenue streams overall. What are the main ways Block makes money, and what really drives profit?
So 4 main buckets: transaction-based, subscription and services, hardware, and Bitcoin.
And Q1 2025 breakdown.
Roughly. Transactions were about 27%. Subscriptions and services around 33%, hardware was tiny, less than 1%, and Bitcoin, almost 40% of total net revenue.
40% from Bitcoin?
Yeah, huge chunk. But, and this is the critical point, the gross profit margins on that Bitcoin revenue are razor thin.
Ah, okay, so a high revenue, low profit from Bitcoin itself.
Exactly. So when you're assessing Block's real profitability, you absolutely have to look at the gross profit from their core services, Square and Cash App's non-Bitcoin stuff. That tells you how the underlying businesses are doing.
That's a super important distinction. Don't get blinded by the big Bitcoin revenue number. So what's the big idea then, the overall value proposition?
It comes back to that economic empowerment theme. For sellers on Square, it's easy digital payments, tools to run their business. For people on Cash App, it's a user-friendly mobile finance platform, especially maybe for those underserved by traditional banks.
And Afterpay.
Payment flexibility for shoppers, driving sales for merchants. They talk about a flywheel effect. Square helps Cash App helps Square, Afterpay helps both.
Makes sense in theory.
But that interconnectedness is also a risk, right? Especially with those compliance issues around Cash App we'll get into. Problems in one area could spill over.
Right. And they talk about that rule of 40 benchmark.
They've aimed for it, yeah. Growth rate plus profit margin hitting 40%, but their 2025 guidance was more like a rule of 31, so they're not quite there yet.
Okay, a complex picture. Ambitious, interconnected, but facing headwinds. Let's shift to Chapter 2, management. Who's running the show?
Well, at the very top, you have Jack Dorsey, Blockhead chairman, co-founder.
The visionary Bitcoin advocate.
Right, known for that. We've seen recent layoffs under him, over 900 people, and also this internal AI push, Project Goose, aimed at efficiency.
So his leadership is obviously key, especially navigating this restructuring.
Absolutely. Executing that vision is critical now.
Who else is in the C-suite?
Amrita Ahuja is the foundational lead, big role. Oversees finance, legal, people ops, and she's chair of Square Financial Services.
She has a strong background.
Very strong. Blizzard, Fox, Disney, Morgan Stanley. She's crucial for financial communication, how they allocate capital, and dealing with all the regulatory stuff.
Which sounds like a big part of the job right now. Any other key names we should know?
Yeah, briefly, there's Brian Grassadonia, ecosystem lead, key and early Square and Cash App. Christy Esperanza is council lead legal regulatory comms. Owen Jennings is business lead product, marketing, ops.
And the Afterpay founder.
Nick Molnar, yeah. He leads sales now within Block. Then you have Donji Prasanna for tech engineering and Thomas Templeton heading hardware and that proto mining project. It's a team effort, obviously.
Okay. What about corporate governance? How is the company overseen? Board structure?
They have a 10-member board. 6 are independent directors, which is good. Dorsey is the chairman.
Is there a lead independent director?
Yes, Roloff Botha provides some balance. But they have a classified board. Staggered 3-year terms.
Which some investors don't love. Can make the board less accountable, maybe.
That's the argument, yeah. Reduces shareholder influence, potentially. They do have the standard committees, audit and risk, compensation, nominating governance, all fully independent directors on those.
Okay, but I saw something about an ISS governance score that looked less than ideal.
Yeah, you probably saw the score from around May 1st, 2025. Overall, it was a 9 out of 10. And remember, 10 signifies the highest governance risk, according to ISS.
And 9 is pretty high risk then. Which part was concerning?
The score for shareholder rights was a 10 out of 10, maximum risk level.
Wow. What does that mean practically?
It suggests potential weaknesses and how much, say, shareholders actually have. Things like maybe needing a supermajority vote for certain changes or limits on shareholders calling special meetings. It points to potentially less shareholder oversight compared to companies with better scores. Definitely something for investors to know.
That 10 for shareholder rights is a standout for sure. Okay, let's talk communication, transparency, ethical reputation.
Well, they do the standard investor comms, earnings calls, letters, presentations. You can find those. They have a code of ethics, an anonymous hotline for reporting issues, the usual corporate stuff.
But there have been some pretty significant hits to their reputation, haven't there?
Oh, yeah. The big one was that Hindenburg research report back in March 2023.
Right, the one accusing them of inflating user numbers and facilitating fraud.
Exactly. Accused them of padding Cash App metrics, making it look bigger than it was, and basically enabling illicit activity on their platforms. That report kicked off a lot of scrutiny.
And it led to actual investigations, didn't it? SEC, DOJ.
Yes. Following Hindenburg, both the SEC and the Department of Justice opened investigations. They're looking into those allegations, but also Block's broader compliance, risk management, and whether their past disclosures were accurate.
Are those still ongoing?
As far as we know, yes. And there have been other reports, too, about federal prosecutors looking specifically at compliance failures at both Square and Cash App. Things like potentially processing transactions in sanctioned countries, not doing enough identity verification. Serious stuff.
And they've already had to pay out some big fines.
They have. In January 2025, they paid $80 million to settle investigations by a bunch of state regulators over alleged gaps in their anti-money laundering programs.
$80 million.
And even bigger, also in January 2025, the Consumer Financial Protection Bureau, the CFPB, hit them with a $175 million penalty.
$175 million. What was that for?
Related to fraud on Cash App, the CFPB said the app was vulnerable to criminals and alleged that Block hadn't been upfront in their investigations.
Wow. Those are not small numbers. Suggests real problems.
Absolutely. And on top of the fines, they're facing multiple class action lawsuits from shareholders alleging securities fraud, basically claiming the company misled them about these compliance issues and user metrics.
So investigations, massive fines, lawsuits.
Yeah, these are definitely material red flags. They create significant legal risk, financial risk, and obviously reputational damage. It raises serious questions about their internal controls, their past risk management, the accuracy of what they told investors. It erodes trust.
Puts huge pressure on leadership.
It's a critical test for them now. How do they respond? Can they implement real fixes? Can they rebuild that trust with investors, regulators, everyone? It's a major challenge.
No kidding. Okay, let's pivot now. Chapter 3. Financial health. What do the numbers tell us? Key metrics.
All right, let's look at some key figures as of around May 13th, 2025. Share price hovering around $55. Market cap, about $33.9 billion.
And the PE ratio, price to earnings.
It's got a pretty wide range shown in different places, like 13 up to maybe 49. That big difference usually comes down to whether you're using standard GAAP earnings or some kind of adjusted non-GAAP figure.
Right. Always need to check which earnings figure they're using.
Exactly. The forward PE, looking ahead, is around 12.9.
Which might look cheap on the surface, but we need context.
Precisely. Price to sales is about 1.4. Price to book, maybe 1.4 to 1.6 range. The PEG ratio, which factors in growth expectations, is actually below 1.
Below 1 sometimes signals undervaluation.
If the growth comes through. But remember, they just cut their growth guidance, so you have to weigh that. No dividend currently.
What about returns? ROA, ROE, ROIC?
Return on assets, return on equity, the ranges reported vary, but they're generally positive. Return on invested capital, ROIC, also varies. But one key point some analysis shows is ROIC potentially being below their reported WACC, their cost of capital.
Which is not what you want to see. Means they might not be earning back their cost of funding.
Potentially, yeah. If ROIC is consistently below WACC, it can suggest value destruction, not creation. Debt to equity looks manageable, and their current ratio points to good short-term liquidity.
Okay, so valuation metrics are a bit mixed, maybe leaning towards reasonable if growth picks up, but that if is big. Let's dig into the income statement. How was Q1 2025?
Q1 25 was Well, a bit of a miss. Total net revenue actually declined 3.1% year over year to $5.77 billion. That was below what analysts expected.
Revenue went down. That's not great.
No, but interestingly, gross profit was strong, up almost 34% compared to Q1 last year.
Okay, so core profitability improved even if total revenue slipped. How did the segments do?
Transaction revenue is up nicely. Subscription and services revenue also grew well. Hardware revenue, though, took a big hit, down significantly. And even Bitcoin revenue growth was kind of modest compared to prior periods.
What are the bottom line in Q1 profit?
On a GAAP basis, they actually swung to an operating income of $329 million compared to a loss the year before. Adjusted operating income was also up, and they reported net income of $190 million.
So profitability looked better, but the revenue miss and the guidance changed.
That was a kicker. They lowered their full year 2025 guidance for gross profit growth, dropped it to 12% from at least 15% previously, and they trimmed their adjusted operating income forecast too, now expecting $1.9 billion.
In Q2 outlook.
They projected profit growth around 9.5% for Q2. So yeah, that downward revision in the outlook really spooked investors, I think, contributed to that cautious sentiment we talked about.
Definitely. Guidance cuts always get attention. Looking back further, historically, how have revenue and net income trended?
Over the last decade or so, say 2015 to 2024, revenue growth has been really impressive, from just over $1 billion to over $24 billion in 24.
Massive top-line growth.
Huge. But net income, much more volatile. Losses early on, then profits, then a big loss in 2022, small profit in 23, and then this really large jump in net income in 2024.
That big jump in 24, does that need a closer look? Sustainable.
Absolutely. You'd want to dig into why it jumped so much. Was it core operations improving dramatically, or were there one-off items, accounting changes, things like that? Sustainability is the question there.
Right. Volatile earnings make things unpredictable. What about margins? How much profit per dollar of revenue?
Gross profit margin has been hovering in the, say, high 30s to 40% range recently. GAAP operating margin and net profit margin are currently positive, which is good.
But we have to remember the Bitcoin effect again.
Critically important. That huge chunk of Bitcoin revenue has almost no gross profit tied to it. So it inflates total revenue but doesn't add much to the gross profit line. It can really distort the picture if you only look at revenue growth.
So focus on gross profit trends, segment performance, ex Bitcoin.
Exactly. That gives you a much clearer view of the core engine's health. And the volatility of Bitcoin revenue itself adds another layer of uncertainty.
Okay, got it. Let's turn to the balance sheet. What's the financial foundation look like? Assets, liabilities, debt.
As of end of March 2025, total assets were around $36.4 billion. They had a good amount of cash and short-term investments, about $7.5 billion.
Did cash levels change much?
They were actually down a bit from the end of 2024, which is something to note. Total liabilities stood at $15 billion. Long-term debt was pretty stable at $5.1 billion.
And equity, debt load.
Shareholder equity was $21.4 billion. The debt-to-equity ratio has actually come down significantly over the last 5 years, which is generally seen as positive, less leverage.
Liquidity looks okay.
Yeah, current ratio, quick ratio, both look strong, suggests they can cover their immediate bills. Plenty of positive working capital, too. So overall, the balance sheet looks relatively healthy. Good liquidity, debt seems manageable.
A solid foundation is good to have, especially with other uncertainties. What about cash generation, the cash flow statement?
They are generating positive cash from operations, which is key. And that operating cash flow seems sufficient to cover their debt payments.
Free cash flow, the cash left after reinvesting in the business.
Adjusted free cash flow for the trailing 12 months ending March 2025 was reported at $1.53 billion. That's a crucial metric.
Why is that so important?
Because free cash flow is what's available to potentially return to shareholders, pay down debt faster, make acquisitions, or just strengthen the balance sheet further. Consistent growing free cash flow is a sign of financial strength and is what ultimately drives shareholder value. Investors often look at price to free cash flow as a valuation measure.
Okay, so generating cash, healthy balance sheet, but we still have those questions around profitability and returns. ROA, ROIC again.
Right. ROA and ROE are generally in positive territory, kind of mid-single to low double digits maybe, depending on the source. Competitive, but not spectacular, perhaps.
And the ROIC versus WACC issue.
That's the more concerning part for equity holders. Some analysis puts ROIC around 4% to 7%, and if, as one source suggested, their ROIC is significantly lower than their WACC, like 4.7% ROIC versus a 14% WACC.
Then they're potentially destroying value with each dollar invested.
That's the implication, yeah. They're not earning enough return to cover the costs of the capital they're using.
Right.
Now, it's worth noting, S&P Global Ratings did upgrade their credit rating recently to BB+, stable outlook.
That's positive from a debt perspective.
Right, cited improved operations, low leverage, so the credit agencies see less risk of default. But for equity investors focused on returns on their investment, that ROIC-WCC gap, if accurate and persistent, is a big concern.
Okay, definitely a lot to chew on financially. Strengths in the balance sheet and cash flow, but real questions around sustainable profit growth and returns on capital. Let's move to Chapter 4, Market Sentiment. How is the market feeling about Block right now?
Well, as we touched on, sentiment has definitely cooled off recently. That Q1 earnings miss and the guidance cut really shifted the mood towards more caution.
So analysts are pulling back, lowering targets?
Yeah, we saw that play out. The average analyst price target is somewhere in the $68 range. Before Q1, that implied pretty decent upside.
But after the results?
A flurry of downgrades. Macquarie, BMO, Piper Sandler, Wells Fargo. A bunch of firms cut their ratings, mostly to hold or neutral right around early May.
And targets came down too.
Reportedly, the consensus average target dropped about 15% after those Q1 numbers hit. So while there's still a range, and some analysts are still bullish, the overall trend among the analysts covering the stock has definitely been more cautious lately.
Okay, analyst sentiment is more wary. What about other market signals? Short interest, options activity.
Short interest people betting the price will fall is around 16 million shares. That's just under 3% of the float, the shares available to trade.
Is that high?
Not exceptionally high, no. It shows some bearishness, but it's not like the market is overwhelmingly betting against it. And the cost to borrow shares to short is pretty low, meaning it's easy to do if you want to.
In options, puts and calls.
The put-call ratio around early May was actually below 1, around 0.58.
Below 1 means more calls than puts being traded, suggesting bullishness.
Generally, yeah. More people buying calls, the right to buy, than puts, the right to sell, which is kind of interesting given the stock's recent performance and the analyst downgrades.
So why the disconnect, maybe?
Could be hedging by long holders, could be pure speculation, could be a belief the sell-off was overdone. Options markets can be complex. But it's another data point suggesting maybe not everyone is pessimistic.
Mixed signals, then. Okay, let's try to think like a value investor.
Yeah.
Chapter 4 continues. Intrinsic value. How do you even start estimating what Block is truly worth?
Yeah, that's the million-dollar question, isn't it? Especially for a dynamic company like Block. Standard approaches are things like discounted cash flow, DCF.
Projecting future cash flows and discounting them back.
Right, or earnings power value, EPV, focusing more on sustainable earnings. But the inputs are tricky here.
Like what?
Well, what's the sustainable free cash flow? We have the TTM figure, $1.53 adjusted, but is that sustainable going forward? What's the right discount rate? We saw that high WACC estimate of 14% reflecting perceived risk.
And the growth rate, especially after the guidance cut.
Exactly. What growth can you realistically project? 12% gross profit this year, maybe analyst long-term EPS growth around 15%. Big assumptions. And the quality of earnings, how much weight do you give those adjusted figures, considering the Bitcoin noise?
And the economic moat, how strong were their competitive advantages?
Seems narrow, maybe still developing, lots of competition. So pinning down a precise intrinsic value is tough.
Have any models tried? What do they suggest?
It's interesting. Despite the headwinds, some quantitative models out there, simply Wall.S, Morningstar, Alpha Spread, their calculations have suggested Block might actually be undervalued at current prices. They show potential upside based on their formulas.
But those are just models based on assumptions.
Critically important to remember that. Models are only as good as their inputs. The market narrative has shifted, right? Block was seen as this high-flying growth innovator. Now, after the stock price drop and performance issues, the market is reevaluating.
Is it a growth company hitting a bump, or are there deeper problems?
That's the core question for investors. Value investors need to be wary of growth traps companies where growth stalls unexpectedly. The high discount rate suggests the market is already pricing in a lot of risk.
So finding a margin of safety is key.
Absolutely. You need to be confident that the issues are temporary, not permanent, before you could argue there's a sufficient margin of safety at the current price. It requires deep conviction about a turnaround.
A tough call right now. Okay, let's look at Chapter 5. Ownership. Who owns Block? Institutions. Insiders.
Institutions own a pretty big chunk. Somewhere between, say, 64% and 72% of the shares are held by large institutional investors.
Which is pretty typical for a company this size.
Yeah, very standard.
Who are the big names? Vanguard, BlackRock.
Yep, those are the top two. Vanguard around 8.6%, BlackRock about 5%, Fidelity is up there too, around 3.4%. You also see names like JP Morgan, Morgan Stanley among the significant holders.
What does high institutional ownership mean for the stock?
It can provide some stability, as these are often long-term holders, but it can also lead to volatility if, say, sentiment shifts, and a lot of them decide to sell around the same time.
Okay. What about insiders? Management, founders, how much do they own?
Figures vary a bit, but it looks like somewhere between roughly 1% and maybe up to 12%. That higher number likely includes Jack Dorsey's significant stake as co-founder.
Have there been any recent insider transactions? Buying or selling?
We've seen some insider selling, yeah. Some in 2024 and more recently in April 2025.
Who was selling?
Christy Esperanza, the council lead, sold some shares back in August 24, reported as being for tax withholding on stock grants, which is pretty common. But then in April 25, there were sales by Brian Grassadonia, Owen Jennings, and Esperanza again.
Insider selling, especially after poor results, can make investors nervous.
It can, and you have to remember the context here. The Hindenburg report had previously alleged significant insider cash-outs before bad news. So with the ongoing regulatory scrutiny, any insider selling now is probably going to get extra attention.
Even if it's for legitimate reasons, like diversification.
Potentially, yeah. A cluster of sales by multiple executives close together, especially near negative news, it can raise eyebrows, even if they have prearranged trading plans, 10b5-1 plans. Investors will be watching those SEC filings closely.
Definitely something to be aware of. Okay, moving towards the finish line, Chapter 6, Risk Assessment. Let's do a quick SWOT maybe, and then focus on key risks.
Sounds good. Strengths obviously include strong brands, Square, Cash App, the large user base, that integrated ecosystem. Weaknesses, the slowing growth, those compliance issues and regulatory overhang, the reliance on Dorsey perhaps, and the low-margin Bitcoin revenue confusing things.
Opportunities.
Expanding internationally, moving upmarket with Square, further monetizing Cash App users, maybe that AI Goose initiative paying off, growing Afterpay.
And threats.
Intense competition, definitely. Regulatory crackdown, especially on BNPL or crypto, economic downturn hitting spending, cybersecurity threats, and maybe execution risk on some of those big bets like Bitcoin mining hardware.
Let's elaborate on those key risks. Competition.
Fierce. From other big fintechs like PayPal, tech giants like Apple and Google moving into payments, traditional banks fighting back, they need to constantly innovate and spend to stay ahead.
Regulatory and compliance seems huge right now.
Paramount risk. The ongoing SEC probes, those past huge fines from CFPB and state regulators, potential for more penalties, restrictions, reputational harm, plus the specific scrutiny on BNPL. It's a minefield.
Economic sensitivity.
Yeah, their revenue is tied to spending, consumer spending via Cash App and Afterpay, business spending via Square. Q1 miss was linked to spending changes. A recession would hurt.
The Bitcoin strategy itself.
Big risk. Price volatility is obvious. Regulation is uncertain globally. And the success of that mining hardware venture is completely unproven. High risk, potentially high reward, but definitely high risk.
Operational risks, too. Platform goes down.
Always a risk for a tech platform. Outages, cyber attacks, data breaches need rock-solid infrastructure and security.
And we have to layer on those new U.S. tariffs from 2025. How do they impact Block?
Potentially in a couple of ways. First, hardware costs. If Square devices or components come from tariff-hit regions like China, their costs could go up.
Do we know if they do?
Not definitively from the snippets.
Yeah.
They use contract manufacturers, might be diversifying to places like Malaysia, but higher costs would squeeze already thin hardware margins or force price hikes on merchants, hitting competitiveness.
What's the second impact?
Broader economic drag. Tariffs can fuel inflation, reduce purchasing power, slow growth overall. That hurts consumer and business spending, which directly impacts Block's transaction volumes.
And management already blamed spending changes for the Q1 miss.
Exactly. So tariffs could amplify those existing headwinds, makes recovery harder, complicates strategy, especially around hardware pricing. It's another material risk factor adding pressure.
Okay, definitely a complex risk profile.
Yeah.
Let's try to wrap this up. Chapter 7, brief conclusion, key takeaways.
All right, summarizing Block, it's a major fintech player, strong brands, big reach. But facing slowing growth, serious regulatory problems, questions about consistent profits. The Bitcoin strategy is a wild card, high risk, maybe high reward. And tariffs add another headache.
Applying those Buffett-style value investing principles.
The business is complex, getting more so. The moat looks narrow under pressure. Management's credibility is questioned due to compliance issues. Finding a clear margin of safety at this price? Not obvious right now.
So the investment case looks tough.
Challenging, yeah. You'd really want to see clear evidence of a turnaround, regulatory issues getting resolved, and a return to consistent, profitable growth before a value investor would likely jump in. A wait-and-see approach seems warranted for many.
Okay. But you teased an end hook earlier.
Yeah.
Something surprising, a different perspective.
Right. So while we focused a lot on the challenges, there's this internal AI initiative, Goose.
The efficiency project.
Exactly. The potential is that AI could significantly streamline operations, cut costs, and boost long-term profitability in ways the market isn't fully pricing in yet. Could this internal silent revolution be a hidden key to unlocking future value?
Interesting. So maybe some hidden potential despite all the visible problems.
It's possible. It adds another layer to an already complex story. Something to think about.
Well, there you have it, our deep dive into Block Inc. Clearly a lot going on, lots of factors to weigh. We really encourage you, the listener, to consider everything we've discussed and, importantly, do your own homework.
Absolutely. Don't just take our word for it. Dig into the financials yourself. Read different analyses. Form your own conclusions.
And if you found this kind of in-depth discussion helpful, please do subscribe to the Stock Analytics AI YouTube channel. We do these deep dives regularly.
And one final, very important reminder. This discussion was for informational purposes only. It is absolutely not financial advice.
Investing always involves risks. You could lose money.
And while we use AI to help with our research, you should always consult with a qualified financial advisor before making any investment decisions. They can help you understand the risks and determine what's right for your specific situation.